We do have breaking news for you this morning that the latest retail numbers are out for the month of August, and they are right as expected, a 1% increase month over month for the month of July. Let's get the latest on the data with Carl Gomez, chief economist and head of market analytics at CoStar Group. So, Carl, again, as expected, right at the point, what do you make of the retail numbers today?
Well, as expected, this came through in the flash estimates and some of the earlier kind of estimates of consumer spending. Consumers are doing great, surprisingly resilient. We've seen a strong increase, 1%, which was in the earlier flash estimates. But even more importantly, core retail sales, which excludes those volatile elements of gasoline and car purchases, were also up a solid 1.1%. And when you look through the data, the spending was pretty good. 6 out of 9 subcategories were fairly strong. And even discretionary spending, on things like clothing were actually quite strong as well. So the consumer in Canada is still in the game. I know we've been talking a lot about the mood, shifting, the worries about tariffs, the job losses. But the consumers, basically held up the economy in the second quarter when we saw that contraction in exports. And now they're doing the same thing in Q3. So far, the numbers are looking pretty good. Not as good as the second quarter, but still holding up quite well.
Yeah, which is interesting, too, just getting, some of this data into motor vehicle sales up significantly, too, pushing that. Take us through what some of those numbers mean and some of that confidence.
Well, and that's interesting because that's a big ticket sale. So again, it's quite strong there. One thing that's fairly interesting is, and I noticed in this report too, some of the strongest growth was actually in tariff-weary markets like Ontario, where we saw strong increases as well. Ontario has also seen very weak housing sales. And I'm increasingly wondering, based on the data that, because folks aren't buying big ticket items like housing right now, and the savings that they've accumulated to put down payments on things, maybe they just start spending on other things. And that could be cars. It could be, trips out to restaurants, travel to other countries, maybe a slight consumer behavioral change that's going on in the country.
And how fascinating is that for you, Carl, too, as we talk about, all the pressures that we've been under, for the U.S. trade war, that consumers and some of the confidence has been waning, and watching some of these economic indicators, too, about, even what's going to happen, with the next interest rate movement, and what's going to happen, what's going to come down from the Bank of Canada. But as you watch that shift and some of it, again, the auto sector in particular, just looking how strong it is right now, and as the consumers head off in different directions, because we know Canadians aren't traveling to the United States, they're going to other places around the world.
Yeah, and this is an interesting dynamic. Of course, Canadians aren't traveling to the United States. We've seen the data on this sort of stuff, but they are traveling to the rest of the world. We are seeing that happen. I chalk this down to a little bit of, maybe retail therapy as well. The mood isn't great. We know the economy is suffering. We know the housing market is in, a tough situation. The Bank of Canada interest rate cuts so far are certainly helping, and it's helping, on people who have HELOCs, and that engages, spending on other things, including cars. So I think what's happening is maybe that the consumer themselves is engaging in, to some extent, retail therapy. If I can't spend on housing, if things are unaffordable there could be this subtle shift that's starting to happen where folks are spending on other things like experiences, to travel to other places outside of Canada, perhaps, spending on things like clothing and shopping at retail stores. I mean, we've seen very steady sort of growth in food and beverage spending. We've got a World Series coming up, and folks are out there spending on that as well. I think that's the mood that consumers are in. And they do have the means to do it, because we had, fairly strong savings rates coming out of the pandemic. And although real wage income gains haven't been all that great, there's a store of savings. And I expect some of that savings may have been, people saving for down payments on homes. And they're diverting that savings to other stuff like retail spending. And that's actually been, for my industry, folks who are involved in the retail space as landlords, has actually been fairly a positive story. Despite the Bay going out of business and some vacancy popping up, the malls are busy. Lots of people who are, who've come to this country, population growth has been strong, and people are still spending, and they're spending on just about everything, but they're also spending on those core goods like groceries and pharmaceuticals and things like that as well.
Carl, I wonder about I haven't had a chance to really look at the numbers all that deeply, but could you maybe comment a little bit on, retail sales increasing at a certain pace, and consumer debt increasing at a pace? We're seeing a dichotomy between wealthier retired people who are making money in the stock market and stuff. So maybe there's a wealth effect taking place there. But it seems to me that there's also a lot of people that are less fortunate that are really struggling. While the Bank of Canada may lower interest rates, there's still a lot of debt out there. So I wonder, how long can the Canadian consumer keep spending if they make these big purchase items like on cars, which are usually financed? How long can Canadians keep doing this?
Great point you make on, basically that there is a bit of a discrepancy in terms of the debt levels, because Canada has some of the highest debt levels in the developed world, even much higher than the United States right now, and that's all consumer debt. A lot of that was accumulated during the big run up in housing. And so, folks are dealing with a lot of debt. And when you look at it in terms of the income distribution, a lot of that debt is concentrated on low income households. And so they're probably feeling the most constrained. There's going to be a mortgage reset. But different than the United States, and it's kind of interesting, the wealth effect coming from stocks, which is really, positively boosted, higher income earners, wealthier folks in spending in the United States, is not as much of an indicator in Canada. The spending that's been happening in terms of income distribution has been across the board. So again, I kind of wonder what's going on. And to your point, how long can this go? I think as long as the housing market is actually holding back to some extent, and the money, and there was lots of money that was being diverted towards the housing sector here in Canada, maybe going to other stuff, and that happens including on the lower end of the spectrum. If you're stuck with your mortgage and the higher payments that are going there, you may have to, feel pleasure somewhere else, and quite frankly shop in other sectors. We have seen, the tightness of household budgets shift how people are spending. I mean, a lot of folks are spending in discount sort of retailing, so the Dollaramas and places like that, and that's just not lower income people. Even higher income folks are starting to shop there more and more. But how long can this go on? Well, you can lean on your savings for quite some time, but what we really need in Canada, and this just isn't happening at a pace that's going to help things with the economy in the near term, is an improvement in productivity growth, and as a result, real income growth. The spending needs to be driven, obviously, by real incomes, not by debt, and not by borrowing from savings, because that is, as you pointed out, a finite situation. So long term, there's definitely challenges there, I think, for the consumer, if we don't get that productivity growth, that investment in high productivity industries. But short term, for whatever reason, the consumer keeps on chugging along.
Carl Gomez, Chief Economist and Head of Market Analytics at CoStar Group. Thanks for this, Carl. Appreciate it.
Appreciate it. Thank you very much.